stock on our radar. They reported a good set of Q3 numbers, margins expanding, consolidated EBITDA up 22%. We have with us Jonathan Hunt, MD and CEO of the company. Jonathan, thank you for joining in. Now, the company has revised its guidance for FY25 from a high single to low double-digit sales growth to a single-digit revenue growth. So what's the growth outlook looking for Q4, and why have you downgraded your guidance?
As you'll recall, the first half of the year, quarter one, quarter two, both minus 2% on revenue growth, so a little bit of degrowth, and very much pinned to what we were seeing going on in the US biotech sector about the challenges they were facing with raising fund, refinancing, and if they don't raise funds easily, they can't spend it. It doesn't filter through to their expenditure with us. And we took a view at the beginning of the year. We thought that would stabilize. We thought it would recover. And I thought it would happen sort of end of quarter two into the middle of the year. It took a little bit longer than I expected, but directionally we were right. So we've seen in the third quarter stabilization in US biotech funding. We've started to see that flow through to expenditure. And that's really what's underpinned, as you said, was good results. Nobody could crib about the third quarter, 11% growth, back into that growth momentum. But it's a little bit later in the year than I'd originally expected when I set the guidance. And that then has that knock-on flow through. So what we'd said at the mid-year was we thought high single digits. I think it'll be single digits rather than high single digits. But it's not really a change in the direction. It's just a change in the timing of when the recovery started. It was a little bit later in the year than I'd really expected when I set the guidance. But we're back now into growth. Your question then was, what about the fourth quarter? I think you'll see that continuation of that level of momentum as we go into the fourth quarter. It certainly feels as though that's the sort of busyness that we've got on across the business. So that means that two good quarters as we go towards the year end of growth takes us into single-digit growth for the full year. And then for next year's outlook, I'll do what I always do. I cover that at the full year results in April.
Well, you've maintained your EBITDA margin guidance of high 20s, 28 to 29%, what we're seeing. In Q3 FY25, margins are at 30%. So what are the synergies that will aid margins in second half of FY25?
Yeah, so the margin guidance for the full year, we reaffirmed pretty much the same as we had last year. We saw good uptick during the third quarter, pretty much as we expected. And then we saw 3 percentage points improvement, came in at EBITDA around about 30. And that sets us, I think, pretty much the pattern through the rest of the year. Drivers behind it, revenue growth was one. That's just operating leverage that comes from growing at 11%. And then within it, a little bit of mix effect, a little bit of movement away from some of those projects that have got higher raw materials costs. And then the final factor, just a little bit better operational efficiency and some good purchasing. We're driving very hard to make sure that we look at our own supply chain and that we really drive out cost of that where we can. So those three factors, I think, drove that improvement in the margin during the third quarter, and we're on track for our guidance for the full year.
Jonathan, what is the revenue contribution expected from the Mangalore API facility and the Stelis Biologicals facility in FY26, and any synergies which we can start seeing as early as Q4?
Yeah, I mean, you'll see it just rolled up into the business and the overall guidance. We don't guide by plant, by production line and segmenting it that much. So you'll just see it rolled up when I talk about it at the full year. But just to be really precise around the Stelis facility, or Unit 3 as we call it, what we'd said is, having bought it, remember we bought it, it was a vaccines manufacturing plant, and that we were going to re-engineer it and invest in it and upgrade it to become a biologics plant. And we said that would take the year. And we're absolutely on track. That'll be finished this quarter. So I don't think there's anything from my point of view that's different from our internal expectations. We've put the CapEx into it. We're upgrading it. It'll come online in this quarter towards the end of the year. And then it'll be open and ready to accept new client work. But that's headroom for growth. We've got to get out in the market, win those mandates from customers So it's very much now about the sales cycle rather than the CapEx cycle.
Just a clarification, so FY26 is when we will see these facilities generate revenues?
Yeah, it'll be available for sale, as it were, from the beginning of FY26.
Okay, got that. What will be the positive trigger then, Jonathan, for the next 12 to 15 months? What's on the horizon?
I think it's pretty much a continuation of the themes that we've talked about throughout the year. We offer a broad range of services. We have the ability to meet a large range of customers' needs. So that capability and that productivity and customer service is still there. So we're going to remain competitive. We're seeing some structural shifts, as you know. The large pharma sector has got quite a headwind coming in terms of patent expiries. That normally drives them to think more carefully about cost and expenditure. And one of the ways that we can help them with that is we can do science that's world-class here in India, just as well as we can do it in Europe and the US. We can do it a lot more cost efficiently. And that's one of the things that drives our top-line growth. And then we move into the geopolitics. And there's been a general trend over recent years to think carefully around your supply chain risk. Where in the world do you get work done? And around that, we have this whole concept of China switches or China plus one. And I think that's a steady flow of work that's coming out of China. There's still some great firms in China, but I think people are rebalancing around that risk. And as it comes out of China, one of the places that people naturally look is India. And within that, leading companies like us, and I would say Syngene's well positioned to be a leader in that context. And that's another driver for us.
Well, one very interesting talking point has been the likely imposition of the Biosecure Act in the US market. So with that, are you seeing increased RFQs, inquiries from clients? And what is the benefit you're expecting in the next couple of years? Or could you quantify it? And when will the revenue generation start from these particular contracts?
Yeah, I think it's happening now. The third quarter performance, that return to growth back up to 11%. Some of the things that underpin that are those China plus one contracts starting to scale up. Yeah.
You spoke about China plus one contracts starting to scale up. Any more such contracts, any pilot projects you're working on?
Yeah, I hope so. We'll be out there every day, competing for our share of them.
Well, that was a very interesting conversation that we had with Syngene. And it's now time for the Growth Code, a special initiative by Grow and CNBC-TV18 designed to provide you with valuable insights and strategies to navigate the market and make informed trading decisions. Today, we'll try and demystify